Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it the same UTC. And a really big shout out to everybody watching this live today, the first stream of 2026, as well as everybody that watches this on catch up. Really special mention just for everybody that sent out some really lovely Christmas and New Year wishes. The same to all of you. Hopefully I got back to everyone. If I didn't, I apologize. I absolutely tried my best. I hope you all had an amazing break. It's a really, really magical time of year for me anyway, something that I really love, bringing a lot of old family together, especially this year that we had a really big Christmas together. And it was just, it was really, really, really refreshing. Also, it's just very rare you get a point in the year when you're, working in finance, or if you're running businesses, or, anything from the building industry and through, that you just have this collective time period that everything really kind of slows down. Apart from all of our unfortunate people in retail, of course. And hopefully you've all got a slightly more chilled year to the start of the year coming up. Craigie boy, how are we doing? And a happy new year to you too, my friend. And absolutely, here we go again. So what do we want to do today? Well, I really want to just focus on just a small overview of what a hugely news-driven week we've got coming up. And Jojo, how are you doing, my friend? Talking of news-driven weeks, Jojo and I were just in the Discord together talking about this very thing. So we're just going to switch across on the charts from a moment. Let's get ourselves aligned with the key news drivers for the week. Let's see what kind of fundamental factors are shaping up. Because look, it's been wonderful to see this little kind of mini resurgence in crypto. We've all loved it. And a really, really big shout out for, an amazing member of the TBN trading team called Just Pit. I don't know if anybody saw Adrian Crypto Burb's message yesterday about him being quite possibly the most underrated trader in this space. And I absolutely agree with that. He started the year, I think, with 3-4 absolutely massive wins. Excuse me, snipering off a lot of these kind of local bottoms. And he's somebody that we're going to get on the show a lot more this year to really share his wisdom and his knowledge. He's a really, really top guy. Doesn't say a lot, but the type of person that puts those words into actions. So let's take a look at our wonderful Forex factory today and just have a quick rundown what we've got shaping up for the week ahead. So for anybody who's maybe new to the show, we're looking here with a focus on the US markets. Obviously, largest market in the world, biggest key driver of financial markets, stocks, equities, etc. The US dollar is the world's reserve currency. And as we can see with like with what developed over the weekend, for example, with the, extraction of Maduro and, the US's intervention there in Venezuela. I'm not going to make this too political. I think people really need to look into what the key drivers behind that are. Look at the bigger picture behind the oil scene, who that oil is going to, why it's quite impactful for China, what that means in terms of this big kind of AI, and I don't like using this term, but it really is like this AI war between, the US and China. So really closely watching developments there. But actually, another amazing member of the TBN trading team, Taha, who focuses on legacy markets, has had us absolutely locked in with this and actually just released a really, really interesting and really well thought out kind of take on this that I've just shared on my Twitter profile. So do go and take a look at that. And also Taha, another amazing trader, really worth a follow. So as we look at this here, before I ramble on too much, Let me zoom in a little bit for you guys. That might be a little bit small. Here we go. So let's look at what we've got coming up. And this is a really interesting one, right? Because we normally don't get these kind of data releases, obviously, this early in the week. But, obviously we're playing catch up here. So focus on the US data, red folder, meaning the highest impact news events. We've got ISM manufacturing PMI. Now, you're not looking for this really kind of above 50 in terms of expansion, under for sort of contraction. But with this side of things, you've got to remember this is older data kind of washing through, right? So a lot of these moves have already been made. It's going to be interesting how the markets kind of impact this. Tuesday, we get a little bit of reprieve, meaning that if we kind of do get through the manufacturing PMI, it's not something that I expect to move the dial in a huge way. Obviously, there's a lot of talk about the US wanting to bring a lot of that manufacturing from abroad back into the States. Now, the data isn't really showing that they're being that successful in doing that. And also, they've got huge cost bases to cover with that compared to where they were saying getting things manufactured in China. All right. But that's still a really important print. Tuesday, obviously, we get reprieve. So we get through that. Things come through. We get a nice couple of trading days. Maybe we see some continuation in risk assets if there's nothing to derail that. Wednesday is the first, I wouldn't say the first key area, but it's when we start to get into the jobs data, all right? And we've got the ADP non-farm employment change. The softer the data in this respect, probably the better it is for a rate cut, or the higher the chances of a rate cut. So that's what risk markets will be watching on that front. Then a little bit later that day, remembering these are UK or UTC times, right? That drops at 1:15 p.m., then at 3 p.m., just as a little extra roller coaster for all of us intraday traders. At 3 p.m., we've then got ISM services PMI and also the JOLTS job openings to process as well. Again, services a little bit similar to manufacturing. You're kind of looking at that over 50 in terms of expansion, under for contraction. So it's kind of relatively neutral, but on the upside there, the job openings again, looking for that to play in. Do we have a soft or, labour market? Do the soft labour market continue? Conditions continue. Start of the year, I've got to get my talking voice back on. Too much turkey and Christmas pudding, right? Then Thursday, we go through into unemployment claims. Again, this is big. It's showing the strength of the overall economy, but it's also showing how many people are out of work. Basically, the way that we plug this into the jobs data is, soft jobs number, unemployment not particularly going down, showing that there's a little stickiness there, or that softness, meaning that that relief can come in the form of rate cuts, and it's just going to push the Fed to kind of stick with that rate cut plan. And then on Friday, we've got average hourly earnings, non-farm employment change, unemployment rate, preliminary UOM consumer sentiment, and preliminary UOM inflation expectation. So there is a week that's really, really peppered with news. All right. So it seems that we've probably lost about half of you on that news update. Does always surprise me that, honestly, linking yourselves in with these guys, it can give you a lot of really, really valuable information. Ultimately, crypto is trading like a risk asset. You want to know what's happening to risk assets. You want to turn to, traditional markets, the equity markets, really. With crypto, as much as we all love it, a real kind of drop in the ocean compared to how these monsters move. Right. So let's get ourselves back to this. And this is an interesting one, actually. I've left it on the daily, right? Our chart. Let me flick this back across from there. Take a quick look at the comments. Bunny, hello, mate, and very much welcome. Good to see some nice positivity in the chat. Yeah, absolutely. Let's get this year off in the right way. There's so much to process, and I think it's going to be potentially a really, really good year, but I think it's still going to, retain its challenges. But ultimately, we just want to be in the best position ready to take that head on. Right, so where are we? Really, really simply for me, Bitcoin, we've had some great price action on the way up. Now, what I want to break down, and on reviewing the performances of the shows last year, something that I realized is kind of interspersed, mixing with bits of education, bits of kind of chart reporting, etc. What I want to do is kind of blend those together, but not spend too much time on the education stuff, but run actual proper education sessions. So what the focus is going to be really is going to be around the daily, and is going to be around the 4 hour. These are the two main framing timeframes that people will use, right? So for example, the analysis that I released yesterday in the Bitcoin report, which is available daily for all members at the Bird Nest, I share mine on a Sunday, all right, to just try and get ourselves out ahead of the week. This is exactly what was on there, and this has actually been in place since last week as well. These arrows, which are hopefully pretty self-explanatory, are the conditions that I'm looking for. And, we've got some great trades coming in on the Discord at the moment. Members, I'm not really going to sit here and shill it. If it's something you're interested in, you can find information down in the Discord. We've got offers going on at the moment. I think there's potentially still a Christmas offer, which I'll share at the end. But ultimately, the team, some of the team, like Just Peer, Trading Tank, have been catching these trades kind of down here on the reclaim of this range and then trading them to the range high, which I absolutely love. Looking at this for me in a longer term swing perspective, this is an area I need broken out of. I can happily day trade this. It's been a beautiful range, shorts from the highs, longs from the lows, which is ideal. But we need like a high energy breakout, either hopefully higher or possibly lower. All right. But that's what we need to see. And that's where we are. So for me at the minute, I'm still, seems a little bit pessimistic, but I'm still expecting some form of rejection up here. If we get a really strong expansion move above it, right? So for example, if we look at the volume profile here, the fixed range volume profile sat atop of, from the first point of consolidation through here, we can see price moving higher to low. Yeah. Using the point of control here basically as a pseudo midline between our kind of hand drawn levels, if you like. I mean, look, this should excuse me, sorry guys, wearing a little bit of a Christmas cold. This should really stand itself out as an area of support and resistance, right? Even if you're not looking at that, you're thinking it's not really support there, BC. I mean, you can take this back further, all right? I either like to see continuation of that support or resistance at a key level, or a consolidation that leads to one of these large moves, all right? Really focusing on this origin. But really localized, you can see it very clearly here. We're wicking up into these areas here, seeing rejections. We're wicking down into these areas, seeing absorption. And then we're seeing expansion. So ultimately, it pays to trade the range until you get some kind of clear confirmation. All right. Hey, Shay, how are you doing, my brother? It's a tricky one in here, man. I've got everybody's usernames rather than their screen names again. So just trying to pick out what I can based on logos and bits in the names. Great to have you with us. Hope you and everyone else had a wonderful Christmas or festive period and have had a great start to 26. So long story short, large expansion away from here, and then you're buying the dips, right? So what are we doing? I'm always trying to break down. One of the first things I come to the charts: are we ranging? Are we trending? Higher time frame. That's going to give me my targets. For example, looking for potential short ups here. If we start to see absorption and rejection, like we see here, like we saw down here, look at these wicks probing into these areas, not really getting very far. You can also use the CVD, the cumulative volume delta. All right, these are really, really interesting, right? You see these really long, for example, like this, definitely longer than average. In terms of what's on the screen here, this is the second longest or largest bearish volume bar. All right. And yeah, that is a large candle there, but you see a really long wick dipping down into this area. Doesn't really match up with this as much, right? We can see this as the start of some form of absorption, right? Basically meaning that the volume is aggressively driving these down into here, yet it's not really making much progress. If we look down here as well, we can see this low here and this low here, which match with these lows here. These lows are flat, yeah? I mean, driving down the same area. There's a slightly longer wick on this one, which does match the absorption we saw here, which gives us, again, a clean indication. But then we look how this is moving up, yeah, showing us that actually there's a lot of volume from the sellers coming in here. It means that the aggressors are really trying to drive the market down, but they're finding a lot of passive orders. They're finding a lot of buyers here, and that's where we look for that relief. So quite simply, that is what we're looking for here. All right, let me just delete these, clear this up a little bit. So why does this make a difference? Well, we're coming into this area now. So what can it teach us? Well, we can look to see what information we get up here. So we're starting to see long upside wicks. I'm not somebody that actively trades Mondays normally. I like to see how Monday's range plays out. It's much more of a traditional market thing I appreciate. With crypto, obviously a 24/7 market, but Bitcoin, crypto, trading as a risk asset. So, we definitely want to be linked in with those. So while I'm actually quite bullish today, and this is why I'm going to break down why we want to look at these plays on the 4 hour as well. It very much depends where you're looking to execute. But for more of my intraday plays, I'm looking to the 4 hour to be my highest time frame, really. I'm always taking stock of the daily, the weekly, but ultimately I want to know where those levels are. So at the moment we're at resistance. We're either looking for a move like this, which is a strong expansion away, and then we're looking for any pullbacks to retest. For example, let's take a look at this area here, and let's just make this red. All right. We'll make it green first to show that it was support all the way through here. We can see it, buyers stepping in, buyers stepping in. Again, aggressive sellers here, absorption. Tried to break down here, ultimately got above, but look how we're just getting diminishing returns here from the high to the low, lower high, higher low, lower high, higher. It just kind of starts to compress in this area, right? So not only have we got support through here, when price breaks down to, we get 1, 2, 3, especially when we get this area probe here, we are very much ranging, all right? Like you can just kind of see it. You tune your eyes to see it, and you start to see the price goes in these nice swing legs. Yes, we get that failure, price comes down, but ultimately, look what we're doing here. We're just moving from another range that started to form up here. Yeah. What happens here? Price sets the range, and you wouldn't have the range from the beginning. You're 1, 2, 3 are the key kind of points you want to look for, so that you start to see that price is starting to trap itself in. If you fail to see these high expansion moves away, like something like this, but outside of the range, chances are when we step back into the range, we will trade at least back to the midline. All right. If you were to draw that midline on by hand, it would be something like this. Yeah, really nice, clear support through here. Back above, support, resistance, resistance, failed through here. But you can also use a volume profile, right? So taking it from the consolidation, drawing it across this area, but you can really start to see price ping-ponging around in here versus, like with this, price breaks down, short retest, small consolidation, further breakdown, micro consolidation, further breakdown. Then you can see that price is changing here. It's starting to range. Why? Because it's in balance, right? So what does that mean? Well, price is either out of balance or it's in balance, right? It's either considered fair value or it's seeking new value. That's how the markets work. Let's always think about your auction market theory. That's what I would say. If there's anything people should really trigger and really align themselves with, is auction market theory, right? Price is always in an auction. Buyers, for every buyer, we need a seller. For every seller, we need a buyer. So our key thing here is looking for key areas. And I think this is one of the biggest takeaways for me from students I worked with in 2025, from members that we worked with at TDN, from the talks, from all the traveling, speaking to people, was people are really, really obsessed about entries. How do you enter trades? How do you do this? How do you do that? People often really don't focus enough on the origin of the move, right? Where price is trading from. And the best way to really visualize that is looking at your ranges, looking at your expansions. So to just go back to that example again, if we look up here, right, we take our range up here and we say, okay, this is our range, just for argument's sake. Even if you were taking it as this and you kept it really, really rigid, right? Price has an expansion down here. Yeah. And when I mean expansion, you want to see a high energy move. This is questionable, but it does gap on the way down. Yeah, we get that inefficiency. So we look for price to revisit that inefficiency before trading it lower, right? Or, for example, if we were taking this kind of move from higher up, we would look for things like breakers, all right? But I really want to focus on this now, because I think this is a really important lesson for people if it's something that you don't understand, and will really set you up well for 2026. And then we're really going to start ripping through some charts, right? So what do we see here? Price fails at the highs, steps back in the range. We can look to short to the mid, short to the lows. Yeah, price steps back in the range. We don't get any expansion back into the range, right? This one we do. Yeah, price expands down. We could look to short into here, but see how the moves aren't really clear. Also, what are we not accounting for here? We're not accounting for this consolidation and the fact that price has now started to find support in these areas. And this is where I think a lot of people do go wrong. Either extend the range that you're in, or if you don't want to do that, don't just ignore, right? Don't just ignore the fact that, you've got this key area here. These consolidations that lead to large expansions, remembering that retail typically, I think, makes up about 5% of the market. It means that institutions, smart money, however you want to coin them, the people that do move markets, this is where they made their move. And there would be an expectation that they would want to protect that move, right? So price comes back to this move, buyers step in again. Price comes back, buyers step in even more aggressively again. I would surmise that those, incredibly well-educated, smart, hardworking, and well-resourced people that are moving these markets would see price coming back into these levels and keep rejecting and just decide to keep buying here and selling here until that fails, right? And you can kind of see that in this move higher here, moves higher into the mid-range. When these people then get stopped out or the market has an aggressive shift, the buyers that were protecting that level there are no longer able to protect that. So what happens? Price sells off here, yeah, This is the area we're looking at. Sells off aggressively. And as price moves back to this level where we get this retest, really have lost the ability to draw with those. And for some reason, TradingView isn't letting me use my back button. Another wonderful update from them. But as we can see on here, right, price comes back to this area. So what does this give those buyers the opportunity to do? It gives them the opportunity to get out, right? And I'm talking about this move here, yeah? Look at the displacement here. Look at the energy coming into this move. Again, you can use CVD for confluence here, but I don't really think you need it. You've had an underside range retest. You've now got an aggressive breakdown here. Price has come into these lows, but not taken them. So you've got a clear downside target. As we see this expansion away, this is the leg we're really interested in here, all right? So what have we got in here? Let me just get rid of this range for a moment. We have, and actually, do this as well. No, I'll leave this on there. If it's getting cluttered for you guys with this level on here, let me know. But ultimately, we had the underside retest here. What have we got? We've got a few different areas that we can be involved. Yeah, we have the breaker candle here. Super important. Right, this is the consolidation that then led to this move higher. Those buyers were then taken out during this inefficiency, taking out this high. This is where price came down. Now, it's a little bit messier because price does find further consolidation here, but it's just showing us that this is on a smaller time frame, like a ranging area. Price steps in high to low to high, breakout, yeah. Failed auction, price steps back into where it was considered value previously, finds buyers at the lows, sellers still retaining strength at the highs. Ultimately, the sellers win that battle. The sellers are the aggressors, the passive buyers step away or they're absorbed. And then we see the breakdown. The market's giving you a trigger to let you know that this is a point of interest. And from there, you have two really simple things to ascertain. One, where in this inefficient move down do you target? Okay, you can use traditional gaps. Yeah, just look at the fair value gaps that are in those moves. You can look for a retest of the breaker, which we got here perfectly. I personally draw my breakers in this bearish case from the low of the body to the high of the wick, unless the wick is a little bit too large, which is nuanced. I do appreciate that, but that's a bit large for me, in which case I focus on the bodies. The other area I would be taking confidence from here is this, which is our bearish order block, which I'll just draw in red for clarity. These are up closed candles, yeah, bullish candles. They're then closed below. At that point, I'm then looking at this as a new area of supply, all right, or a bearish order block, or people call them different things, but basically this is the consolidation here. Sellers overtook that. This area, when retested, is something we would look at for those sellers that now control the market to retain their control and continue to drive price lower. For the keen-eyed among you, or maybe the slightly more experienced, you'll also notice that we closed below the breaker here. Yeah, that was the candle that closed below. We also closed below the order block here. And we violated this previous bullish order block, right? Which, this can be confusing, I know, if you're new, but they're bearish candles. We close above the body here. Price draws back. Intraday would be a lovely long setup in there. Anyway, we can see the resistance building above here. So as price pulls back, this is where we should be looking to get short. One of the key things in here, and I think what catches most people out, is first of all establishing whether we're ranging or trending and stripping away the noise of the markets, or anybody maybe on Twitter or socials that are really kind of putting across a strong opinion. Again, I'm not saying don't follow people on Twitter, socials, bits and pieces. Definitely validate who they are, but just never take what they say as golden. But anyone on here, just go and look at this stuff for yourself and make sure that whatever you're plugging in fits your own plan. So anyway, we get the strong displacement breakdown. Now, a lot of people will use Fibonacci's for this as well, including myself. I used to, before I really kind of progressed in my volume studies over the years, right? I used to use Fibonacci for this as well, and there's absolutely nothing wrong with that. Ultimately, one of the big things going for fibs are the whole kind of self-fulfilling prophecy, right? So as we can see here, let me just make sure that's actually in the right place. There we go. Strong breakdown here. I would recommend using Fibonacci's when you're either setting a new range, meaning that you've got a new high to a new low, so a dealing range basically, and ideally where you're seeing some kind of impulse move, some kind of high energy move down or up. Then what we're looking to gauge is strength as price pulls back, and the key area here, certainly what I've always used, is the golden pocket. Between the 0.66 and 0.618 is the area that I target. It's nice to see price get a pullback above 50% as well. If you're looking at that from a terms of premium and discount, then you're taking that trade from the best side of this leg because it's giving you the highest risk to reward to the downside. And as Jojo pops in there as well, please do let me know. We're going to save the last half of the show for chart requests if anybody has some. If not, I'll just pick some at random. We'll start with some new charts and put these principles into play, all right? So as we look at this here, now what I prefer to use personally, and you can obviously use confluence from both, we know the golden pocket's here, and we know that the area between the golden pocket and the 786 sits beautifully in this gap, yeah? So this fair value gap, people, most people here will know it by, here we go, right? So 3 candle pattern is the gap between the low, in this case, of the wick of candle 1 and the high of the wick of candle 3. It's this gap in between that we can see by the red box. Now, the better way to do this, and obviously there's different platforms that do this more accurately. No offense to TradingView. I've used their software for a long time, not much shy of a decade now, but I do, there are some different charting platforms I'll personally use for volume. However, a lot of those aren't really day-to-day platforms people will use. So I will keep this on TradingView. I think TradingView do an amazing job, by the way, of making this all very, very accessible for a very reasonable price. So if we remove this here, then I want to know what's happening in this high to low, right? And if we take our volume profile out, we take this. And really, I'm interested in the expansion leg, I would call it, or the impulse move lower. So when we have these 2 candles here, we can start to see, as we zoom in, see the area that the market has these low volume nodes they're called, right, but there's hardly any volume transacted. Either that or we see these large volume shells. So we can see in this move down here where the most volume was transacted here, which is around the point of control. Remember, I haven't drawn this all the way across yet because we wouldn't have this information. So we can look towards a point of control, this volume shelf. This is definitely a point of interest here where price moves in. Then when we set another candle here validating the low, I would typically move it across onto this low, right, if it's lower. And then in here, we're seeing a very similar situation, right? POC is pretty much in the same place. We've got this little volume moving in here, and then we've got this shelf here. The other thing that we have is the value area high, all right, which is this here. Perfect. All right, let's do that in purple so it matches. So all of a sudden, can you see how you're starting to build confluence? All right, price has this impulse move down. You're not rushing in to try and short this. You're not wondering if this is going to be a deviation or a reversal. You're just looking to see if these areas are respected, or, like we said before, if we draw it from high to low, we're looking also at the Fibonacci here, and you're saying, okay, well, I'd love to see price to get up to the golden pocket here. We've got this volume shelf starting to build. We've got this area of low volume here. If we start rejecting in this area, or if we drive up into this area of low volume here, these can be good areas to get on board with a short. If, however, we absolutely blitz through those and show them little respect at all, then we can start looking for these kind of reversal plays if price gets back above here. So where does that leave us at the moment? Let's finish up by just putting these principles onto here. I'm just going to hide these, as we know, on these charts as well. They're just for anybody that isn't aware, these things don't get deleted unless they're deleted on the live show, right? Because people do ask a lot of questions about these. These are the education charts that we use. So as we come into this area, I do really love this move here, but this was a 4-hour move. Yeah, because we should have been looking to be long from the range lows. We should be looking to be short from the range highs, right? Unless we get that confirmed breakout above. Or not a we, this is my plan as well, obviously. So as we take this on a 4-hour, however, look at all the noise that we had in here. However, just humor me here for a second, and we're going to run through the same things we discussed, right? So our daily range, now the 4-hour is probably a little bit aggressive time frame if we're using the daily, but when the confluence is so clear, we can see clear support here, clear resistance here. Now to set this range, we would have needed at least 1, 2, 3 touch points. So realistically, we would only be looking to trade. The first trades we'd be looking to take would be this short, all right? So let's just imagine for a minute that this is all the information you've got. Price is impulse move, short consolidation, impulse move, micro consolidation, impulse move, absorption at a key level. Really important to line these up. Then we see price trying to break away. Then it comes back down, finds support here. All of a sudden you can see 1, 2, 3. Price is starting to consolidate. Now, if you get a clean breakout on this move here, we trade the breakout. If we get a clean breakdown, we trade the breakdown. All of this, by the way, is always available for you to see on my Twitter profile, my thoughts from previous weeks, reports, etc. And obviously all fully available over at the Bird Nest Discord as well. So the first play here is the short. All right, we get this down here, down into the midline. Price drives up into the highs again. Again, we're short the highs. We haven't had a clean breakout. So let me just pop these in here just so you can see this. Obviously, we'll see it when we're here as well. But any point that we engage with these lows, right? So again, following this principle, this is a kind of area I'd like to see some liquidity taken as well, because one of the key things you can see here on these breakdowns, there we go, is even before we really knew this was the range here, right? Price driving up. The rejection here, price still took some form of liquidity here because it was resting beautifully above these highs, right? And then the same thing happened here. Yeah. See how price, even though it's still engaging with the resistance level, still came up to take liquidity. So a run up here to 94.56, 9567, that kind of area anyway, sweeping out the liquidity, seeing that, do with this. Seeing that very sharp, aggressive move back down, right? That's the point that I'm going to get interested here to start looking to sell some rips, all right? The opposite would be true if this move continues and we get this aggressive move above here. Then I'm looking for pullbacks, all right? Again, we're either using our Fibonacci here and we're saying, okay, if we have this large move up, what are we going to retrace to? Or using our volume profile. To make this a little bit easier, it'd be great if we got a small consolidation here, maybe a move lower, and then had a secondary leg that took us higher, because from that consolidation, we can move the actual origin of the breakout, and it can give us a little bit more accurate information. So this is the playbook here. Now, just dropping this onto a 4-hour, so you could refine this further. We got the key resistance, key support, but look, it's a little bit different, more difficult to spot this on the 4-hour, right? Especially as we were talking about, if you're looking at it from this point here, yeah, you can see the resistance here. This looks a little bit messier. This looks messier. On the daily, we remove a lot of that noise, and you can see the wicks, the bodies, and bits and pieces as well. So as we see price driving into here, this would be the first area we look to get short. If we were looking for some kind of aggressive expansion down on the 4-hour, this would be the move. Yeah, starts taking out these lows here. We start to see the momentum of the market come in. We'd look to be short in here. This one would probably stop us out and come back above the high. We would get that back in spades here when we have this move lower. All right, so just for example, if you were using volume here, all right, my real key focus here is on the move down. Yeah, the leg down, the expansion leg down. And we can see this beautiful area of low volume here. The low volume node supported by this volume shelf is where we got the rejection. Intraday, you'd make some money there, I think. I'd be surprised if you didn't. But even if you didn't and you then get stopped out, it doesn't stop the principle being the same, right? What do we see here? Now, this is the expansion leg down. Yeah. Depends how you allow it for your wicks. Data is better. I do like to see the actual leg down itself and monitor that, but you could also look to take it from here as well, because there is quite a bit of a large wick there. We can see area of low volume here. Yeah, volume shelf, which should keep price suppressed, and then the value area high. All of a sudden, we've got a range high rejection. We're reacting at a low volume node, and we've got an area of slightly higher volume above it, and we're currently in an area of high volume that should or could suppress the market lower. So this is where we can get on board with that. Now, in terms of the lows, look at this. When we see this reaction here, there's no impulse higher. There's no structural shift. There's no structural break, right? Price meanders lower until we get here. And it is a fraction of a break, but I tell you why I like this. Because of the expansion, because of the aggression off of the lows, right? So if we look at this and we say to ourselves, all right, we take that from the low. Again, remember, we stopped the volume profile here as it broke structure and had the impulse. It's a little tricky, this one. I wouldn't mind people being sidelined here, to be honest, just because the fact we didn't get much displacement above this high. However, we took liquidity from the lows, saw a fast, aggressive, high impulse move with displacement, leaving these gaps, and look at what we've got again. This beautiful low volume node, all right, and the same down here where we see reactions later on. So if we apply those kind of principles, looking for those expansions, even here on the 4-hour, if we forget the daily, we can see quite clearly price is just in a little bit of a messy range here, right? If you were to look across here, honestly, yeah, and I actually think I drew this in, but I'll draw it in again. Can you genuinely, so let's say we're trading it just from here for argument's sake, right? Can you spot, all of these points of resistance that are pretty much lining up? They don't have to keep going all the way back. Right? They don't. They can just kind of sit here. Yeah, cheers, Craig. It's been a 2-year journey for me with volume, and while it's something I've used in the last kind of trading year, and I don't like to show these things until I'm really, 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 really deeply into it with my own trading. It's not. I don't really share the theory of what I do. It's only how I trade. But volume's been a huge leg up for me, for sure, kind of going deeper with it anyway. But I know the volume profiles on TradingView aren't the best, but they are good enough. Believe me, I've spent a lot of time, hundreds and hundreds of hours testing with them. And while, yes, there are other platforms that do it a little bit more effectively, I think this is definitely within reach for sure. So then we look to the lows. Thank you, Craigie boy. And then we see that these lows are lining up, right? So if we just draw a box just over these highs and lows, right? And then we can do the same here, right? Obviously in a slightly better box there. But can you see how even with this information here, we can see price ranging? So we know areas that we can get, where we can target to look for longs. We're inside a larger range, right? So if the trade for the daily is that we react here, range low to range high, respecting the midline. Well, if we look at the midline being around here, which we drew in, we've got resistance, 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 resistance. What did I say in terms of looking for that high impulse move up, right? I would be happy to short this all day long. Yeah, we don't get a displacement move lower. Not a problem, right? Now, when we're looking at this resistance here, look how we did get that move lower, right? See how price does come into there. And we unfortunately just don't pull back to this area here. I mean, we do all the way over here. Just to show you an example of this, I would keep moving this down probably to around about here. I'd be happy that this had then formed a bottom. We can see price doesn't come back to our key areas here. This is the really key part. Look, it's within, look for the chart gap and then overlay it with what real volume is doing. And if we draw this across here, yeah, it's a great area to, look for a short trade on this time frame. But I want to just cover, we've done the mean reversion part. Let's look at the breakout, right? Don't get trapped here. Don't get trapped here. Be patient. It's one of the most difficult things in trading. And believe me, what will frustrate you the most is you'll be really patient waiting for a move like this to happen. You'll draw your Fibonacci or you'll draw your thing and you'll be like, yes, I've got it. And it won't tag you in. It will just take off from too high. Don't let that dishearten you. It happens to me several times every week. It happens on the live trading show. We have a good laugh with members about it. But it is what it is. Yes, Yak, yes. Probably my favorite saying in the world from my dear Polish friends. It is what it is. You need to park that and say, do you know what? If it worked once, it will work again. So anyway, we see the breakout from resistance here. We've got a target above, yeah, because we know this is resistance here. So we don't want to be messing with this. If this is going to hold, one of two things is going to happen in my mind. And, while you're kind of getting used to, if volume is something that interests you and that you can always use your Fibonacci's, right? If we're looking at this here, we didn't get anywhere near the golden pocket, right? We just tagged into the 382, but this is where volume for me, and I, looking at this, I'm not 100% if this played out or not. I wasn't part of this move, right? But from the low to the high, and this isn't looking back, by the way. The low we marked is here. Yeah, this would have been the high we marked until price moved to here and then actually gave us a full high. All right. God, for some reason my back button, my undo button stopped working on TradingView. That is something I'm really linked into. So anyway, we can see we've got the 382, right? But what's really interesting here, we take away the fib. Yeah, because the fib didn't give us the golden pocket. Hopefully everybody here can spot, where the areas of high volume are. Yeah. Versus where the areas of low volume are. That is an absolutely ridiculous drawing tool. Hang on. I don't even think the back button's working on here. Who's stolen my back button? That is ridiculous. Right. Now I've got to just do these by hands. Please bear with me. Yeah. So we get rid of those. Right. So where's the area of low volume? Hopefully you guys have seen this. And this little area here as well, where price just tweaks into the low. So let's draw that up. Do that in green. And we say to ourselves, all right. So now what have we got? We've got a large expansion, low to high of that move. So it was here, then we moved it to here. But look, even when we had it here, guys, right, I'm going to move the volume profile down to back where this was. The gap's still in the same area. It's showing us this is the key in efficiency. Market loves to react to these low volume nodes, right? For years and years and years, I taught this just within price action gaps. It's a very similar theory, but volume helps you refine it to a specific area. Because if I'm trading this without volume, I don't know if this is the gap that's going to be reacted. Yeah, because if I'm trading this without volume, then this is my screen-based fair value gap. But then I also have one below here. And if I want to see it come back 50%, you can bet I'm going to favor the one below. But because I haven't allowed for volume, then obviously we get the reaction here and price really rips away. So that's where I'd be looking to take those longs from. So now what are we saying? We're in a slightly more dangerous part of the move here, right? But we do have another clean expansion leg. One of the things, if you want to really kind of dive in to looking for these, is look for the consolidation before the breakout and take that low. If price is now trending, which it is, yeah, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, higher. Look for these small consolidations and these aggressive impulse moves higher, right? Like, for example, people would be looking at this going, higher, high, higher, low, higher, high. Right, fuck, we're bullish, I'm in. And then you just get the flush out. There's no momentum in here. There's no real impulse, all right? Where here, look, price has this consolidation, big breakout, small consolidation, big breakout, small consolidation, big breakout. So if we wanted to be super aggressive with our plays today, and again, that this lines up with our fundamental drivers, the key areas that we're looking at the market and saying, this is where I'm expecting a reaction, and for this reason, we have to draw out, we have to write a plan. It's not just about the technicals, it's not just about the volume, it's about the when, the where, the why, the how, all right? Are the market conditions receiving risk well at the moment? Well, we need to wait for the equity market open in a couple of hours really to see how the market really reacts to that. But ultimately, if we go over on our bar over here and we look down, we can see that the overnight, the openings on the NASDAQ, the S&P 500 have been very positive, which is great for risk markets, right? As we then look down here as well, we can see quite an elevated VIX, which is a sign to be a little bit cautious. Gold is strong, but gold is just being on a mega tear, slightly different drivers behind that. And the DXY is quite strong. So for me, there's quite a lot of mixed signals here in the market, all right? We're seeing strong risk markets in terms of our indexes, but we're also seeing things that you would normally look at as being a little bit counter risk, right? In the DXY strength, the volatility index being higher, gold, obviously, which has kind of, been a law unto itself. Bond yields are down. However, if we were looking for this and we had all the narratives lined up and we were like, right, look, this is basically how we're looking at this now. Trump is maybe Trump's put out a tweet, something positive for risk, something positive for Bitcoin. We have the Federal Reserve come in and they're saying, do you know what? We get soft job data and all of these catalysts start to align for the fact that we're in good conditions for risk. That's when we start to overlay the technicals onto that. I'm made my whole career as a technical trader, but what a lot of people don't understand is if someone says to you, it depends if they ask you two different questions. If you really want to kind of really poke away at a trader, if just ask them what their edge is. Someone should be able to tell you their edge literally condensed in under a minute. But in terms of if someone says they're a technical trader, technical's a really great place. You're managing your trades and risk here. News and fundamentals drive the markets. Technicals allow us to manage our risk, find good entries, manage trades, etc. So you always want to overlay both is what I'm saying. Anyway, here we have the same situation, a small consolidation and a nice breakout, right? Lovely. Obviously, we don't retest the consolidation. That's fine. What we want to know is what's happening here in the breakout. So I'm moving it from here. I'm actually going to take it to this secondary candle. We've got a particularly long wick on this one here. Right, and what we can see happen here is price had this extension up higher. Then price came back down into here. And actually, where did we see the bullish reaction? Here. At the first kind of key low volume node. There's that one there as well, but this one's really in, and we're holding the range low. Now we have another low volume node down here, which is the one I'd be even more interested in, because it would also look to give us a range high retest in here. Holding structure, deeper pullback. Like I said, I'd be favoring shorts from here. I'm not going to be actively looking for shorts as we're hitting into the approaching the equity market opens, or pre-market open in 45, and then hour and 45 until the cash open. But yeah, now I've got a really clear plan, right? I just wait for price to come to here, and this is what kills most people. I think it's SZ actually. He's got something brilliant on his timeline. Let me just look it up quickly because it's so unbelievably true. I think he's still got it on there. He has. So it says plan on the left-hand side, waiting in the middle, and trigger on the right. And under waiting in the middle, in brackets, it says, this is where you fuck up. And that is absolutely true. You must have been living under a rock if you're not following SC. I'm not going to sit here and shill him. The guy's one of the best traders in the space in some respects, by a long way. But definitely, if you're not, go and follow SC. He's an absolute gem. So here we are. That's the plan, right? Does anybody not understand that? Would anybody like me to explain anything like a little bit further? And again, you don't have to use volume for this, guys. You can use Fibonacci's. You can use the standard gaps here and wait, be patient, look for price to come back, and then monitor how price reacts in these areas. All right. So just for example, if you're looking at this here and you're saying, okay, well, what are you waiting for? Sorry, let me put this back on the 4 hour very quickly. I'm just going to look at this as a 15-minute kind of intraday building to a swing kind of position. So remember, anywhere in the green box, we'd be looking for long positions. We're only going to use the same techniques, all right? This would have been too aggressive for me to take, but we are going to take a look at this here as well. I'll show you the kind of thinking behind this, but ultimately we want price back down here. So we're looking for the same thing. We're looking for basically a high energy range breakout and then a pullback to a low volume node on the volume profile, all right? Or we'll also set it up so we can look for breakers and gaps as well. And I'm going to do this on the 15-minute, which for me is quite a natural step. And I do prefer the 5 if I'm looking at it like this, but this is a good natural step down, removes a lot of the noise, all right? So if we want to be long from in here, what do we want to see? Well, we want to see that range breakout, right? So yeah, we have like a little mini move here, and a lot of people will be like, oh, okay, brilliant, right? Slap the volume profile here. Here's the high. Where do we act? Brilliant. Low volume node, perfect entry. For me, it's not, because even though we've got the green light to go from here, we didn't have any kind of structural move here. I do like to see, like, I'd be really, really tempted, and I'd be swearing a little bit when I didn't take it. But for me, I do like to see a little bit more confirmation. This wasn't quite enough of an impulse for me, but we did have the gap. And look, if you weren't using volume and you were just using regular charting techniques, then you would still find that gap and you would still have a beautiful long trade in here. All right. However, when we do break above this here, I really like this move. I'm just going to get rid of this just for a moment. All right. And I'm going to get rid of this and this just because it kind of muddies up the chart just a little bit. All right. So what have we got in here? We can see we've got resistance, right? Even if you're looking at the majority of the wicks in here to the bodies, where's price really finding a tough time? For me, this really stands out. That's very high wick deviation. The price comes back in, not massively interested in this. This is the key area: resistance, 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 resistance. Price comes through here, then what do we get? We get a very small consolidation here and then a really aggressive breakout. After this breakout candle here, I want to know what price is looking to do. All right. So if we're looking at the impulse move from higher, or you can take it from here, from the range that led to the move, get yourself a little bit more data. Where are the areas of lowest volume? If we draw them across from here, make sure we're not being too thingy on that one, because I don't think we quite twigged it. And then I'll make that green. All right, and you can see it overlays with the actual gap there as well. We just didn't quite tweak into this. Volume shelf held really well here. Obviously, if we were holding this across just from the expansion leg, yeah, we can see we had exactly the same price supported by this volume shelf. Didn't quite tweak in here. And this is what you then need to get used to. By the way, if we had tagged in on that, I would look to be doing this. When we have that expansion, I'd be looking to feather some orders in here at the very high of this. Yeah, just below the volume shelf and within the low volume node. And then I would put my stop here under this, right? Because right at the low here, we can see an area of basically zero volume. Now, this would be a very, very aggressive long if we got it from here. But what I want to do is make sure that I'm under the profile here and aligned with this, the last down close candle. And then I'm just saying to myself, okay, well, where are we longing this to? Remember, this is our daily resistance level, the range high. So we've got a nice 2.91 trade there. All right. No, we don't get tagged in it, unfortunately, this time. But like I said, these aren't cherry picked, right? So these are just situations. We look at the chart, take what data we've got in front of us. So let's put these principles in before we shut up shop and look at this on a different ticker, shall we? Has anybody got a different ticker they would like me to take a look at? If not, I'll pick something like Solana or ETH. Oh, awesome, Craig. Yeah, I'm really glad you like it. Like I said, I've used this, well, a long time, really, actually. One of my kind of first real breakthroughs with trading was working with a group where we were using a lot of volume, point of control, value areas, doing a lot of volume overlay, VWAP bits and pieces like this, and Fibonacci's, looking for these high expansion, high volume expansions in crypto, and then looking to trade those kind of pullbacks. Yeah, really, really, really good group, actually. Not the guy that used to run it, CJ, actually retired a few years ago, but was a traditional market guy. It was brilliant fun. And then it's really difficult, right? Because I never really felt proficient enough until now with volume studies and volume spread analysis to really kind of share it on these, but it's I really do know it's such a big part of how I trade, right? Oh, bless you. Husky's just come in and treated us to a sneeze. It's just such a big part of how I trade, and I really want to put it across. And one of the big things for me was just making sure that TradingView, because a lot of people I spoke to over the last few years, like, TradingView is just too unreliable with the volume, etc. and stuff, which I appreciate. But from the studies that I've done, certainly as you're getting into this and getting to know it, it's good enough, I would say personally. Otherwise, I wouldn't share it. So let's take a look at the Shay legend, Pepe. Yeah, why not? Let's get on the king of the memes. Let's have a look. What have we got on here? Let's take a look. Not many are trading this on the perpetuals, are they? But let's look at these buttes. Right, so let's take a look here. I missed you too, Shay. All right, I'm going to just delete all of this. Start nice, clear, and fresh. Well, first of all, interesting juncture from kind of like a support and resistance area, right? So what I like to do when I'm dialing in with support and resistance is I get the horizontal line tool. You can find it over here. And by the way, anybody that doesn't know, quick hack, if you put a little star next to these, just hover over it and put the star on, then it goes onto your little toolbar that you can move along here, and it just gives you a handy quick fire for the tools you use the most. So horizontal line, that's the one that goes across the whole screen. As I look in here, I can see clearly, again, I'm just looking for these clusters of lows, right? Something that's telling me along here that there's something. A lot of people will be put off by things like this. Nice smiley face for you. That doesn't bother me. It's a bit of an anomaly, but also you can see that from a support resistance standpoint, let me just zoom in a bit because it might be a bit small for you guys here. From a sort of support resistance standpoint, it's still relevant. But all these lows here are really starting to cluster and tell us something, all right? So what I'm going to do here, and by the way, this is a deviation. Look, offers resistance, pops back above. What do we do when we pop back above resistance? Yeah, Fibonacci or our volume profile. We say, okay. Where's the low volume node to trade from? I know this looks magic sometimes, guys. There's a lot more that goes into it than this. It won't always work as clean as this. And you've also got to have the right psychological mindset. You've got to have the ability to execute. You've got to have the ability to manage positions. So it's not this kind of magic bullet. Craigie boy. Yeah, I've learned a lot from Raz about volume over the years. He's a wonderful volume trader. Really, really, really is. Blessed with amazing technical brain, unlike myself. So this was a bit harder for me to learn. But as you can see, these all coming down, and I'll definitely get him back on the show, mate, for sure. We can see these lows forming, right? So just take your horizontal line tool and just go, right, just make it really big as well, so it really stands out. And you go, okay, color code it as well if you want to say, okay, well, this is support here, right? This is green. This looks quite nice to me. Support, yeah, little consolidation forming as a breakout emerge. Support, deviation, move above, high momentum move higher, support, high momentum move. Okay, so as we then look at this across, this area definitely has relevance. We can see it has relevance here as well. Now, something that I do like to do, I typically draw these as boxes, right? So that this kind of takes a lot of the wick. So leave your line on there. You don't have to make it that thick. It can actually be a bit of a hindrance at that thickness when you're doing this. Then I'm going to get the box. I'm going to say, okay, I like to anchor to the bodies, but I also want to make sure that I'm kind of getting as much information here as I can. So I'm going to start by anchoring this to here. And then I'm just going to say, okay, well, if this is the point here, price was finding support, this is where it started to find resistance. Then we had this impulse move above it, retest, and price moved away. So I'm going to leave this here, and then I just want to drag this across. And let's just say this is your current price action. Like, damn it, I've missed this move. No problem, because this is still holding relevant, right? So when price eventually comes back to this area, yeah, I'd be looking to long off of these, but then look what happens, right? What do we get? That high, the high momentum move lower, yeah? So we would look at this as a breakdown anyway, but look, here's your range. Yeah, here's the breakdown. Here's the retest of the gap, whether you're using volume, whether you're using Fibonacci. Ultimately, price is retesting the inefficiency in there, allowing, yeah, these buyers to either mitigate, get out of their position for a minimal loss, and then allowing others to step into the trade to the downside. So right now on Pepe, this is looking super interesting to me, right? Because Just looking back across here a minute, yeah. So I probably, in truth, make this a little bit thinner, but it's all semantics, really. I think probably just to tweak it up a little smidge. But this is looking good, right? So how would I look to play this? Well, it's a tricky one because we've got obviously our point of resistance here. I'm just going to make this a teal coloured box. But we do have this like rocket ship of a move higher, right? I can't long into this here. My playbook from here is really simple. I would look, yeah, if price kind of came back down from here. I mean, in truth, we do have an area of really low volume that price is kind of testing into here. The fact that this is sat atop of a key support resistance level, and this could indeed be the flip. I mean, I would consider sizing down a little bit and looking for some positions in here. If not, I would like to see price move down into this area of low volume down here. All right, aligned with our actual chart gap as well, and see a strong reaction. I don't mind price wicking down into here, into this, but ideally coming back above the range low. Yeah, the value area low here would be a good trade. If not, what I would look for is for price to kind of consolidate in here, showing us that it's, yeah, and then looking for that impulse move retest and then trade it higher. Yeah, so we've got our consolidation in here. We start to see a few of the deviations. Yeah, price trading high to low gives you good range plays. Also lines up with this consolidation here, which was actually the origin of, you know, the start of this move lower where it broke down. So seeing price accumulate here, I would then look to trade this leg higher. If price had an aggressive move down here, I'd be a little bit hesitant to trade this to the downside at the moment. I would, again, probably want to see price do something like this, where we move down, really kind of disrespected some volume in here. And then in this impulse leg down, I would want to see some displacement. And then I would look to trade it on the move back, something like that. All right. Literal magic. Yeah. I mean, I think the most difficult thing about trading, if I've, you know, I got asked this once years ago and I gave some ridiculous answer, I think. But not something I didn't, but something I do believe in. But I think actually when you look at it, it's not about so much about the technicals. It's not so much about where you enter from. It's, you know, risk management is a massive part. Trade management is a massive part. But it's when you look at all of this with hindsight and you say, oh, I would have taken a trade there, or I would have taken this drop, or look at this big displacement move. Yeah, I'd be short here, or I'd be short here. It's then stepping into the charts without any of that confluence, without any of that information, and just seeing live price action tick along, right? And then finding those moves and that momentum that you can get involved in, right? For example, you know, price is fractal, right? So we're looking at this happen on every time frame, right? So we're looking in here. This is just kind of, you know, not really much going on, is there? But where's the last? Identify that last key impulse move, right? What do we have in here? A range. Yeah, you can throw. This is a 1 minute chart, by the way, but you can throw a box over this range. Yeah, probably even a little bit less than that. And then as we look up here, well, what do we have here? Well, actually, this impulse move lower here, even on the 1 minute, right? You can start to see, you know, before the formation of this range. So let me just get rid of that. I'll give you examples of both. Yeah. But you can start to see here, price moves down, sets this low. Then we start to expand a little bit lower, move the profile. We can see the area of low volume here. Stands out like an absolute sore thumb, right? And then you start to see price compressing in this area, yeah? Obviously got low volume here as well, but if we draw the value area high and low across, you can see this is making your range for you. Then as you get more information, 1, 2, 3 standpoints here, you can start to draw a volume range across from the point of consolidation, yeah? And then you have this information, you say, okay, you keep drawing it across to the point that then when you get this breakdown here, you can see a high energy move below, as we did with this one. So how do we know that that wasn't right to trade? Well, we don't. What we do, we just take the volume profile, high to low, look for the areas of low volume, which is here, and then you see on a lower time frame, if you get a setup in there, obviously a lower time frame from a 1 minute would be ridiculous, but just to show the nature of price and how price is fractal, you know, it's a good way to go and practice. Even with something like this, right? Look at this large move down here. This is a huge expansion. A lot of people kind of looking at this, and this is the lowest low, right? So this is where I'm keeping the volume profile anchored to get this information. And I'm looking up here and saying, like, well, where are my key areas of low volume? They're in here, which is a large area, but then it's up here, right? So that's where I'd want to see price drop. And I don't think we have. We basically just got into this area here and then shorted, right? So just look for what I would call the clear and obvious. Does RSI mean anything when you're looking Midterm. I'm not a massive user of RSI, but I used to be for momentum trading for sure. RSI, MACD. Ultimately, they're all kind of different versions or variations of volume, right? So I think it's really whatever gives you that little extra confidence. Something that's difficult with these with things like the RSI and the MACD is they're lagging indicators like moving averages are. So that's where it can just get a little bit sticky sometimes. But certainly if it gives, I used to run some brilliant strategies, especially in trending markets, looking for moving average retests. And then you would use, for example, you'd have like, if we imagined this was on a higher time frame, right, you'd have these 3 moving averages here, right, and price would have crossed down here with those moving averages, so you're in an uptrend. Then every time price kind of starts to pull back to it here, I would then look down here, if this was the RSI, for example, for the RSI to be kind of down here, in oversold, and then looking for those conditions to move higher. Tricky thing with RSI is it can live up here for a long time, and people think it's a short signal, but actually it's just showing obviously strong relative strength, so it can be tricky. But absolutely, like I say, really with systems, it's about finding something that speaks to you, something that you connect with, and then off the back of that, it's then really about just mastering that craft. If things like moving averages, RSIs, etc., really speak to you, then find a system that's repeatable, that you deeply understand, that fits with your lifestyle, the time you can bring to the charts, the expertise you can learn on it, and find the best traders in the world that trade those systems and just obsess with learning everything they know. Then decant everything you've learned from them, find the groups that they operate in, or if they're people from history, find everything you can. Decant the very best things, or the things that stand out the most to you, and then make a list of them. It's what I did when I got really serious about volume, and I was finding the best volume traders in the world. And I was like, right, how do I, what best things do they all do? What little subtle things do they do differently? Which of those do I find easiest to spot, and which one stands out really clearly to me? Then your challenge is stripping all the noise away, making sure you're using constructive practice time where you're not just sitting there staring pointlessly at charts, you're finding areas, you're using replay mode to go back, you're back testing. Then when you find a system that works, it's about working on yourself, your time, your energy, your mindset, and then just getting into execution mode. All right, legends, it's been wonderful to be back with you. Thank you so much for everybody that's joined in today. It really is a blessing to get to do this to you. Shay, brilliant to see you. Craigie boy, you guys ever regulars. Our wonderful Jojo as well, who was on with us. Bunny as well, I saw you on there earlier, and everybody else. I'm really sorry if I haven't seen your comments. Sometimes we don't get all of them come through, but I hope you've enjoyed the show. Do let me know this year moving forward if there's more things you'd like to see, things you'd like to see less of. Really ultimately want to make these as effective for you guys as we can. Now, this is a really terrible shill from me, I know. I'm not even sure if this is still on, but I hope and I think that it is. Adrian, Crypto Burb is running a discount if you do want to come and join the Burb Nest. In fact, if it isn't still running and I've shared this and you don't get the 20% discount, just message me and I'll give it to you. All right, I'll wear that one. All right, if you want to come along. But do remember, we get loads of free stuff out there as well. There's tons of great stuff on the website. Come and join. You can join as a free member to the Discord as well. You can sign up for the newsletter. You can follow myself and the traders on Twitter. We share as much as we can. We're just really, really committed to making sure this is the best year possible for everyone. So again, a huge shout out and thank you to everyone. Brilliant to be back with you all. And yeah,